All right, let's dive into one of the most incredible comeback stories we've seen in aviation. We're talking about AirAsia and their jaw-dropping financial results in the third quarter of 2025. You know, after years of just trying to survive the pandemic, this airline isn't just back on its feet, it's absolutely soaring. So let's break down exactly how they pulled it off.
First things first, just look at this number, 1.02 billion Malaysian ringgit. That's the core earnings for their aviation group. Seriously, this one number tells you almost everything you need to know. The engine room of this company is absolutely firing on all cylinders.
And this just puts it into perspective. Check this out. Last year, in this same quarter, their parent company, capital A, had an operating profit of about 19 million ringgit. Okay, not bad. This year, 305 million. That is not just growth, my friends. That is a quantum leap. It's a clear signal that they have officially turned the corner.
So, the million-dollar question is, how? Right? How does a company go from just hanging on by a thread to this level of success in what feels like the blink of an eye? Well, it wasn't magic. It was a perfect storm of smart strategy, incredible cost discipline, and a huge corporate shakeup.
So first, let's just take a moment to appreciate this stunning profit turnaround. I mean, these results aren't just a good quarter. No, this is a pivotal moment. This is where the company's story changes from one of recovery to one of aggressive, and more importantly, sustainable growth.
And the good news was just everywhere you looked. We already saw Capital A's monster profit, but their long-haul airline, AirAsia X, also brought in a solid net profit of nearly 28 million. And here's the crucial part for any airline. They kept their planes packed. Load factors, that's just the percentage of seats filled, were sitting at a super healthy 82%.
Okay, now for the fun part. Let's pop the hood and really get into the nuts and bolts. What exactly was fueling this incredible performance? What were the specific levers they pulled to make all this happen?
Well, no surprise here. The heart of the operation, the core airline business, was the main driver. Those core earnings, they didn't just grow, they skyrocketed by 76% compared to last year. And this wasn't some fluke. It was about getting the strategy just right at the exact right time.
And it really boiled down to three big things. First, jet fuel prices finally came back down to earth, which was a huge relief. Second, all those heavy costs from getting planes back in the air last year, well, those have now normalized. And third, and this is classic AirAsia, they slashed their operating costs for every single seat by 12%. That kind of discipline is in their DNA, and it's a massive reason why they win as a low-cost carrier.
But here's where the story gets even more interesting. This comeback isn't just about flying passengers from A to B. For years, Capital A has been quietly building this whole ecosystem of other businesses, and this quarter, that big bet really started to pay off. And you can see it right here. Just look at the growing slices of this pie for ADE, that's their engineering division, and Teleport, their logistics arm. You know, these aren't just little side hustles anymore. They are becoming major, profitable pillars of the entire company, proving that the big vision of creating this whole travel and logistics ecosystem is actually working.
Let's zoom in on Teleport for a second. The logistics business turned a profit of 8.3 million ringgit. And what's behind that? A massive 69% explosion in e-commerce volume. They've tapped right into the digital economy and basically turned the cargo space under their passengers' feet into a highly profitable machine.
And then you have ADE, the engineering division. Its revenue shot up 20% to 221 million. Now, what's really important here is that ADE is doing more and more work for other airlines. That proves it can compete and win as a standalone maintenance and repair business in a very tough market.
So all this amazing financial performance, it's really just setting the stage for the biggest story of all, a massive corporate restructuring that's literally creating a brand new unified AirAsia. This is the master plan coming to life. Now, this might look a little complex, but the plan is actually pretty straightforward. Step 1, Capital A got the green light to transfer all its airline businesses. Step 2, they're merging their short-haul operations with the long-haul AirAsia X. And the result of all that? Step 3, a single, unified AirAsia group that's going to launch by the end of 2025.
This merger is also the golden ticket to getting out of something called PN17 status. The simplest way to think of this is like a financial distress list for public companies in Malaysia. So this whole restructuring isn't just for show. It's their way of telling the world, and especially investors, that they are healthy, stable, and back on solid ground.
And CEO Tony Fernandes summed up the vision perfectly.
The whole point is to create two clean, powerful companies. You'll have the massive, unified airline on one side. And on the other, you'll have Capital A, focused on growing those exciting digital and logistics businesses. It's all about unlocking value by letting each side focus on what it does best.
So, with profits booming and this brand new structure almost ready to go, what's next? What does the flight path for 2026 and beyond look like? I mean, are the skies really as clear as they seem?
Well, from everything we can see, the outlook is incredibly bright. Bookings for the super important fourth quarter holiday season are looking really strong. They're on the verge of having their entire fleet of planes back in the air, which means no more capacity issues. And maybe most importantly, management is confident that this profitability is here to stay and will even grow in 2026.
So here's the final takeaway. The hard part is over. The painful restructuring is done. The new AirAsia is here. It's unified, it's profitable, and it has a razor-sharp strategy. The survival phase is officially in the rearview mirror. The question is no longer if they can recover. The question now is whether they can use this new powerhouse structure to truly dominate the world of low-cost travel. The comeback is complete. The era of domination, well, that might just be beginning.